What's happening here in these product sectors? Is it really people doing what I'm doing, renovating my kitchen?
Sure. So I think there's some of that, certainly. But I think on the stocks, keep in mind there's been a lot of pain this year. A lot of these stocks are still down 30%, 40% plus. So what you're seeing is a little bit of a relief rally. Certainly the home improvement side is more stable, more resilient than the new construction side.
What is Whirlpool specifically reflecting? Is it in part reflecting tariffs that were put on foreign-made appliances?
It is. With Whirlpool specifically, you had two offsetting impacts. You had some of the safeguard provisions that were put in place to protect them against some of the Korean manufacturers, which would have helped, but then most recently some of the newer tariffs are effectively offsetting that. I think people are trying to balance the two.
One's on steel?
One's on steel, one's on the components.
Components and things like that. So where does this go from here?
I think you need to tread carefully. And I think some of the concerns around housing, a lot of investors feel like there could be some bleed into the home improvement side. We think as long as home prices remain positive, that's really the key. Home improvement should remain steady, the consumer is strong, but you do have to be wary of some of the risks that you're seeing develop in the existing home market and the slowing price.
Do you have a favorite stock or two in the sector?
We do. The two that we're most positive on right now on core building products, Fortune Brands, which produces plumbing, cabinets, doors, and then on the actually on the heavy side, you mentioned Summit, but I'd also say Vulcan Materials. This is a sweet spot.
Company.
Yeah, aggregates, real sweet spot for them right now. Late cycle, public sector spend kicking in. It's a good place to be.
Should we be seeing an upgrade cycle of some sorts? I mean, if the housing boom, if the peak in housing was about 10 years ago or so, or 11 years ago, should we see a big replacement cycle when it comes to appliances, when it comes to just things around the house? I mean, all those new homes that were built at that time, I would imagine, need some fixing up about now.
I think that's a great point. I mean, we certainly think that there's room to go on home improvement. Part of it's the replacement cycle. Part of it's just look at the incredible amount of home equity that's been rebuilt. That's kind of the key. And
so can we just tap on that home equity front, because Diana Olick has told us that we are sitting on record amounts of home equity right now. How conscientious are you as an analyst of the interest rate picture for whether or not people are cashing out with home equity loans to finance these home improvement projects?
It's a good question, and what we're seeing is the cash out portion is actually starting to slow. It is rate sensitive. Right? That's not the only avenue to tap into, and it's become more expensive. But it is true that we are at record home equity levels, and that does give buyers multiple options. You can pull out a home equity loan. You can still draw on home equity. It might be a little more expensive to do it through a cash-out refi, but you could still end up saving if you're not fully drawing down and trading up to that much higher rate. So I think it's something that could moderate the growth a bit, but it should still, the home equity in aggregate should be a powerful tailwind.